Guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 151, recorded here on January 26th, 2025. This podcast is for entertainment only and is not investing advice. So do your own homework. We are at block 880938, Moscow time 9:51. Fees are 3, 3, and 3. We will get into the market news update and outlook, go through the weekly top Bitcoin news. There's a lot to cover this week. Very busy week. We'll check out this week's featured post on the Bitcoin Fortress Substack and then finish up with the boosts before we sign off. So let's jump right in with the market update. Wall Street on Friday closed out a strong week. It saw the benchmark S&P 500 index notch its first record closing high of the fledgling year. The event of the week was no doubt U.S. President Donald Trump's inauguration on Monday, Martin Luther King Jr. Day. He immediately signed a slew of decrees, many of them undoing or targeting actions taken by Joe Biden's previous administration. Notably, he refrained from immediately announcing tariffs on other countries, though he said Canada and Mexico could be targeted as soon as February. He did reiterate his Make in America or Face Tariffs message at the World Economic Forum in Davos Klosters, Switzerland on Thursday, while also touching on topics such as oil prices, interest rates, big tech, and banking. Later, in a Fox News interview at the Oval Office, Trump said he'd rather not put tariffs on China. Sentiment this week was also boosted by a strong start to the earnings season, including a blockbuster quarterly report from U.S. streaming giant Netflix. Trump's announcement of the Stargate project, a $500 billion four-year initiative to build out artificial intelligence infrastructure, added to the bullishness. The focus now turns to monetary policy, with the Federal Reserve's first interest rate decision of the year scheduled for next week. For the week, the benchmark S&P advanced 1.7%, while the tech-heavy Nasdaq also climbed 1.7%. The blue chip Dow surged 2.2%. Looking ahead, market participants better buckle up, for Wall Street is in store for an incredibly busy week. Monetary policy is back in the spotlight with the Federal Reserve's first interest rate decision of the year on Wednesday, following three straight meetings to close out 2024, where the central bank delivered interest rate cuts. Economic data since has recalibrated traders' expectations. The Fed is widely expected to take no action this time. The earnings season turns into a deluge. Most notably, four of the Magnificent Seven companies are scheduled to report: Microsoft, Facebook parent Meta Platforms, and Tesla on Wednesday, followed by Apple on Thursday. Other major names that will be reporting include Boeing, Starbucks, IBM, Visa, Caterpillar, and Intel. The economic calendar will be pretty packed as well. Investors will receive an update on U.S. gross domestic product growth, along with a reading on the Fed's favorite inflation gauge, the Core Personal Consumption Expenditures, or PCE price index. Some more made up numbers. All right. Jumping into the Bitcoin news, we will start with block 880923, important news of the week from No BS Bitcoin. President of the United States YOLO's a shitcoin on the eve of inauguration. A new meme coin launched by President Donald Trump has hit a capitalization of over $10 billion over the weekend, marking Trump's latest venture into cryptocurrency and merchandise sales in the lead up to his inauguration. The coin is already set to list on all major cryptocurrency exchanges. Trump himself doesn't appear to know much about the meme coin. I don't know much about it other than I launched it. I heard it was very successful. I haven't checked, he told a group of reporters on Tuesday. One thing that my crypto lawyer colleagues seem to agree on is that the Trump project is one of the most significant things to happen in the industry, period. The President of the United States just YOLO'd a shitcoin on the eve of his inauguration. This was hitherto Completely unthinkable, wrote industry lawyer Preston Byrne in a blog post. Bitcoin miner Mara dedicates block 879618 to the president-elect Donald Trump. Mara Digital Holdings welcomes Donald J. Trump as the 47th President of the United States of America, reads the op return messages in the block, followed by the Constitution of the United States. Donald Trump signs a full and unconditional pardon for Silk Road founder Ross Ulbricht. The president made the announcement in his Truth Social platform, adding that, quote, the scum that worked to convict him were some of the same lunatics who were involved in the modern day weaponization of government against me. And there's a nice picture of him, Ross, being freed. Tornado cash sanctions officially overturned. The U.S. District Court in the Western District of Texas has ordered the U.S. Treasury's Office of Foreign Assets Control to remove addresses associated with tornado cash from its specially designated national and blocked persons, or SDN, list following an appeals court ruling that the Treasury Department exceeded its authority in sanctioning the crypto mixer. Tornado Cash sanctions reversal has no effect on the trial, says DOJ. Tornado Cash developer Roman Storm seeks to dismiss charges after a Fifth Circuit ruling reversed sanctions against the software. The U.S. Department of Justice prosecutors now claim that the sanctions reversal doesn't impact the criminal trial against Tornado Cash developers, adding that the case is about control over the Tornado Cash user interface, not the validity of the sanctions. The government's opposition highlights the DOJ's continued willingness to leverage criminal enforcement as a tool to shape the law, in this case specifically to introduce FATF Recommendation 66 on the classification of non-custodial UIs as a category of a virtual asset service provider, which have not yet been adopted by the US, reported Lola L33TZ for The Rage. By the way, she's a good follow on Nostr if you are interested. President Trump issues executive order to create a working group on digital assets. The order is intended to set the direction of the White House digital asset policy, focusing on protecting and promoting digital asset users and developers without unlawful censorship, supporting the development of dollar-backed stablecoins, ensuring fair and open access to banking services, providing regulatory clarity based on technology-neutral regulations, and prohibiting central bank digital currencies, or CBDCs. The working group shall evaluate the potential creation and maintenance of a national digital asset stockpile and propose criteria for establishing such a stockpile, potentially derived from cryptocurrencies lawfully seized by the federal government through its law enforcement efforts, the order states. And more on that later. Actually, we'll give some thoughts on that and sort of an editorial towards the end here of the podcast. Gary Gensler resigns as the chairman of the SEC. The United States Securities and Exchange Commission has issued a statement announcing his resignation. Mark Ueda has replaced Gensler and will serve as interim chairman of the SEC. President Trump plans to nominate former SEC Commissioner Paul Atkins to lead the agency, though Atkins still requires Senate confirmation. Caroline Pham named acting chair of the Commodity Futures Trading Commission, or the CFTC. She is set to replace Democratic Chair Rostin Benham, who took office in 2022 and will remain on the commission until he steps down on February 7th. Pham has called for the agency to create a program to support the development of digital asset companies. She is expected to collaborate with White House AI and crypto czar David Sachs and Paul Atkins on a new regulatory framework for the industry. US SEC launches a task force to develop a clear regulatory framework. The task force, led by Hester Pierce, aims to establish clear regulations, crypto company registration procedures, and an effective disclosure reports, according to Atlas 21. US SEC rescinds Staff Accounting Bulletin 121. This is pretty big news. The SEC issued Staff Accounting Bulletin 122 which revokes the contentious SAB 121 and permits financial institutions that hold Bitcoin and other digital assets for their customers to decide if the held digital assets should be reported as a liability. This should enable U.S. financial institutions to offer Bitcoin and cryptocurrency services with fewer regulatory hurdles. And I'm sure the banksters can't wait to get into that game and give Coinbase a little competition. Senator Lummis to lead the Senate Banking Subcommittee on Digital Assets. Senate Banking Committee Chair Tim Scott has appointed Lummis as the inaugural chair of the newly established Senate panel focused on digital assets. Kind of cool. Trump orders U.S. withdrawal from OECD. The U.S. president directed the Secretary of the Treasury, the U.S. Trade Representative, and the Permanent Representative to the Organization for Economic Cooperation and Development to inform the OECD that commitments made by the previous administration, quote, with respect to the global tax deal, have no force or effect within the United States absent an act by Congress adopting the relevant provisions of the global tax deal. And that is the right thing to do because we don't want the globalists making decisions for us. U.S. federal court rules backdoor searches of Section 702 data unconstitutional. This one's an interesting one. A federal judge has ruled that the federal government's method of searching through information incidentally collected on U.S.-based individuals violates the Fourth Amendment of the U.S. Constitution. The landmark ruling comes from the criminal case, the United States versus Hazbajirami, following more than a decade of litigation. More states joined the Bitcoin strategic reserve race. According to unconfirmed reports, there are now at least 15 U.S. states working on plans to integrate Bitcoin as part of their asset reserves. Wyoming, Representative Jacob Wasserberger has introduced HB 0201, known as the State Funds Investment in Bitcoin Act, which proposes creating a Bitcoin strategic reserve for Wyoming. This bill would permit allocating a portion of the state's funds into Bitcoin as part of a diversified investment strategy. Massachusetts, according to a proposed bill by Senator Peter Durant, the state treasurer would be permitted to invest up to 10% of the funds deposited in Commonwealth Stabilization Fund in Bitcoin or digital assets during a fiscal year. Additionally, any Bitcoin or other digital assets seized by the Commonwealth may also be deposited into the fund. Arizona, Senate Bill 1025 by Representative Jeff Wenninger and Senator Wendy Rogers, titled the Arizona Strategic Bitcoin Reserve Act, would allow public funds to invest up to 10% of public monies under their control in virtual currency holdings. California is reportedly working on a Bitcoin focused bill through Assemblymember Philip Chen's office, supported by the nonprofit Proof of Workforce. Shout out to Don Bay. Utah State Representative Jordan Teuscher has introduced the Blockchain and Digital Innovation Amendments, or HB 230, which authorizes the state treasurer to invest a portion of public funds in Bitcoin and other digital assets. And finally, Kansas Republican Senator Craig Bowser has introduced Bill number 34, a proposal that would allow public pension funds to allocate up to 10% of their assets to spot Bitcoin ETFs. And the game theory is playing out exactly as we would expect. El Salvador adds 11 more Bitcoin to its reserves. The country's Bitcoin office announced that it added another 11 Bitcoin to its strategic Bitcoin reserve, bringing the country's total holdings to 6,044 coins. I still think they borrowed money from the IMF to buy Bitcoin, which I think is hilarious. Some of the latest corporate Bitcoin purchases include MicroStrategy, which acquired 11,000 Bitcoin for $1.1 billion and now holds 461,000 coins acquired for $29.3 billion. Genius Group increased its Bitcoin treasury to 420 Bitcoin by purchasing an additional $5 million worth of Bitcoin. Pearl Technology Group announced an $8 million Bitcoin purchase, increasing its total holdings to 510 coins. Critical Metals Corp announced a BTC treasury strategy stating that it plans to acquire up to 500 million worth of Bitcoin. Rumble has reportedly made its first Bitcoin purchase as part of its $20 million Bitcoin treasury strategy. Block Inc. hit with $255 million in back-to-back fines. Last week, the Consumer Financial Protection Bureau ordered Block, the parent company of Cash App and Square, refund up to $120 million for fraud losses and pay a $55 million fine to the CFPB's Victims Relief Fund. Earlier, Block also agreed to pay $80 million to state regulators over anti-money laundering issues. Cemex exchange reportedly hacked for of $29 million. The Singapore-based cryptocurrency exchange has halted withdrawals after reports of a hack. One of its hot wallets was reportedly drained of $29 million worth of cryptocurrencies. Ledger co-founder and his wife freed after ransom kidnapped. David Balland, co-founder of Ledger, and his wife were kidnapped from their home in France early Tuesday and released Wednesday night following a police operation. According to the prosecutor's office, the kidnappers demanded a large ransom in cryptocurrency. According to sources close to the case, the kidnappers accepted ransom in Tether, which was quickly frozen and seized. At least 8 people have been arrested thus far in connection to the kidnapping. Crypto.com relaunches its exchange in the United States. The move comes roughly 18 months after the company shut down the initial version of the U.S. institutional exchange it was testing. Revolut app is specifically banning Graphene OS users. The Revolut banking app, which has been criticized by Graphene OS for its poor quality, reportedly justifies the ban by claiming it is, quote, serious about keeping your data secure. Revolut's app will stop working against once they start enforcing having a Play Integrity API result showing it's a Google certified device. This is not a security feature, but rather anti-competitive behavior from Google deployed by apps like Revolut wanting to pretend they care about security, said the Graphene OS developers. OpenSats announces 3 new grants for Bitcoin Core developers. The new grantees include contributors Lorink, Kevin, and Daniela Brazzoni. BTC Pay Server Foundation receives a $25,000 grant from Unbank. The BTC Pay Server Foundation received a $25,000 grant paid directly in Bitcoin from Unbank, a cash-focused Bitcoin exchange. Unbank's support is a testament to the growing recognition of open source payment solutions in the Bitcoin ecosystem. This grant will help our efforts to enhance BT Pay servers' capabilities and reach, said BTC Pay Server core contributor Rockstar Dev. Breeze raises $5 million to bring Bitcoin payments to every app. The company has announced raising a $5 million funding round from Entree Capital, Ego Death Capital, Plan B Fund, and TimeChain. Blockstream launches Blockstream Asset Management. The company announced the launch of Blockstream Asset Management and 2 Bitcoin-based investment funds, the Blockstream Income Fund and the Blockstream Alpha Fund, set to open Q1 2025. These funds target institutions and accredited investors seeking secure Bitcoin investments. Additionally, the Blockstream Yield Fund will be released later this year, offering consistent low-risk returns for Bitcoin holders, per blog post by Blockstream. Rumble announces Rumble Wallet. The CEO of the video sharing and cloud computing platform, Chris Pavlovski, confirmed the development of Rumble Wallet, adding that it is a massive internal project which creates a new way for creators to transact with Bitcoin and USDT. Rumble raised $755 million from Tether last month and has started purchasing Bitcoin for its reserves. Besides, the company recently signed a cloud agreement with the government of El Salvador. Adopting Bitcoin Cape Town 2025 took place this week. Day 1 and Day 2 talks are available. There's links in the article, which I will put a link in the show notes to. The uh, Bitcoin Honey Badger 2025 conference is set to take place on August 9th through 10th, 2025. More details are coming soon. OpNext 2025 to take place on April 11th through 12th, 2025. OpNext is a Bitcoin scaling conference that brings Bitcoin stakeholders together to discuss new ideas, how to bring Bitcoin to the next billion users. It will take place at the Microstrategy headquarters in Tysons, Virginia. Moving on to the top stories of the week in Hodler's Digest for January 19th through 25th. NASDAQ has submitted a filing on behalf of asset manager BlackRock seeking a rule change to permit in-kind creation and redemption for its spot Bitcoin exchange-traded fund. Bloomberg ETF analyst James Seifert said in a January 24th X post that BlackRock should have been allowed to do this from the get-go when the BlackRock iShares Bitcoin Trust launched alongside the other 10 US spot Bitcoin ETFs in January 2024. On the same day as the filing, 6 more crypto ETF applications were filed in the US. NASDAQ proposed to allow for in-kind transfers of the trust Bitcoin as per a January 24th filing with the US Securities and Exchange Commission. The filing stated that authorized participants, institutions that facilitate the creation and redemption of fund shares, would be able to use either cash or Bitcoin to create shares or receive cash or Bitcoin when redeeming shares. Despite never selling any Bitcoin, MicroStrategy may have to pay taxes on its unrealized gains. We'll dive into that in a little bit more detail later, as well as something that they're going to do about it. But Michael Saylor's MicroStrategy, the largest corporate Bitcoin holder, may have to pay federal income taxes on its unrealized gains, according to the Inflation Reduction Act of 2022. The act established a corporate alternative minimum tax under which MicroStrategy would qualify for a 15% tax rate based on the adjusted version of the company's earnings, according to January 24th report on the Wall Street Journal. Still, the U.S. Internal Revenue Service may create an exemption for Bitcoin under President Donald Trump's more crypto-friendly administration. MicroStrategy's holdings have surpassed 450,000 Bitcoin, worth more than $48 billion after the company bought 243 million more of Bitcoin on January 13th. Silk Road founder Ross Ulbricht thanks Trump for full pardon. We heard about this earlier. A little bit more detail here. This marked the first time Ulbricht has spoken publicly since being released from a maximum security prison in Arizona, where he was held for more than 11 years. Last night, Donald Trump granted me a full pardon. I was doing life without parole and I was locked up for more than 11 years, but he let me out. I'm a free man now, so let it be known that Donald Trump is a man of his word, Ulbricht said in a video shared on X on January 23rd. Ulbricht expressed gratitude, calling the pardon an amazing blessing. He added, "Thank you so much, President Trump, for giving me this amazing blessing. I'm so, so grateful to have my life back, to have my future back, to have the second chance. This is such an important moment for me and for my whole family." SEC cancels controversial crypto accounting rule SAB 121. We already talked about this. U.S. Senator Elizabeth Warren has penned an open letter to Department of Government Efficiency Chair Elon Musk proposing ways the federal government could cut wasteful spending. According to the January 23rd letter, Warren proposed fully funding the Internal Revenue Service, closing the carried interest loophole, and adding a capital gains tax on estates. The wealthy appear to be the targets of Warren's IRS proposal, as the socioeconomic group is mentioned 4 times in the brief 4-paragraph section titled Cutting Waste and Abuse in the Federal Tax Code. With an estimated net worth of $426 billion, Musk certainly falls into that category. Senator Warren voiced strong concerns about the DOGE process and its policies, particularly regarding potential conflicts of interest among its leadership. The year 2024 marked the beginning of a shift toward broader cryptocurrency acceptance, and the launch of new coins by President Donald Trump and First Lady Melania sets a powerful precedence for what is to come. Bitcoin's price action is mimicking the 2016 to 2017 cycle and could hit a top of $150,000, says Glassnode lead analyst James Check. Check said that in a January 23rd episode of the Thea podcast that 120 to 150 is what he would call the topping cloud for Bitcoin, and any level above that likely won't hold for long. We can absolutely bust out the top end of that with a very, very low probability of staying at the top end, Check said. Bitcoin is currently trading at 103,019, and Check added that the average guy is quite profitable if it reaches 120, significantly more so if it reaches 150. Above that is speculative fever, and I probably would think if we go above it, we will go back down through it, he said. Bitbo data gain shows Bitcoin short-term holders have paid an average of $90,349 per Bitcoin, while long-term holders have paid an average of $24,627. John McAfee's widow, Janice Elizabeth McAfee, has allegedly launched a meme coin in her late husband's honor as the meme coin frenzy, galvanized by U.S. President Donald Trump's weekend token launch, continues to grow. McAfee announced the token launch through her late husband's X account on January 23rd, writing, "You didn't think I'd miss this cycle, did you?" During his life, McAfee was an ardent supporter of cryptocurrency, particularly Bitcoin, and its ability to reduce state power over the financial system. Initial reactions from the crypto community on X were positive, but later analysis revealed that 90% of the token's 100 million supply had already been distributed to hundreds of different wallets, with just a small amount sent to two trading pools. Cryptocurrency donations to extremist groups have dipped globally but are rising in Europe, according to a report from blockchain data platform Chainalysis. The report shared with Cointelegraph shows most crypto donations to extremist groups came from North America prior to 2017. Since then, Europe has been steadily capturing inflows. Between 2022 and 2024, for instance, Europe accounted for nearly 50% of extremist group on-chain activity. Not only are crypto donations to extremist groups in Europe rising, but the size of those donations and donor intensity are rising as well. From 2023 to 2024, at least five types of extremist groups experienced an increase in size of deposits year over year. White nationalists, 270%, nationalists, 164%, conspiracy, 70%, anarchists, 35%, and anti-Semitic, 22%, notes the report. Wonder how good that data is. Ledger co-founder released after days in captivity in France. Already heard about that. And that wraps up the Hodler's Digest. Next up, we'll go to Bitcoin.com news and dive a little deeper into this MicroStrategy situation. Jonathan Weil of the Wall Street Journal reports that MicroStrategy, the owner of an impressive 461,000 Bitcoin, could face a significant tax liability unless the current rules are amended. Weil's headline provocatively suggests the company may require help from Trump's IRS. The issue stems from tax provisions introduced under the Corporate Alternative Minimum Tax, a measure born out of Biden's sweeping Inflation Reduction Act of 2022. The regulation stipulates that corporations with adjusted financial statement income surpassing $1 billion over a 3-year period are subject to a 15% minimum tax on those earnings. So far, Trump has been on a roll, slashing, cutting, and firing specific government officials, and he's wasted no time removing some of Biden's executive orders. MicroStrategy has been trying to fix the situation in order to be exempt. If no exemption is granted, some believe MicroStrategy may need to liquidate part of its Bitcoin holdings to meet tax obligations, which could destabilize the broader cryptocurrency market. Others think this is a foolish speculation in fear, uncertainty, and doubt. Whether or not the firm gets Trump's help or not remains to be seen. But from a free market perspective, whether it's MicroStrategy or any other firm, the notion of taxing unrealized gains, as the CAMT states, is both ethically indefensible and economically destructive. Moreover, by targeting unrealized gains, wealth that exists only on paper, the CAMT exemplifies an aggressive state overreach that undermines both property rights and market stability. It seems that forcing a company to sell its Bitcoin holdings to satisfy an arbitrary tax provision could destabilize the broader crypto market, but more fundamentally, it represents a violation of the company's right to manage its resources freely. The unfolding situation surrounding MicroStrategy and the CAMT raises critical questions about the intersection of taxation policy and corporate autonomy. As debates intensify, the issue transcends one company's challenge, highlighting a broader ideological battle, the balance between government authority and economic liberty. How policymakers address this contentious topic could set a precedent with far reaching implications for businesses and emerging asset classes alike. And yeah, taxing unrealized gains is not good. Not good at all. This next story is from Cointelegraph. This was posted on January 24th. MicroStrategy announces debt buyback amid potential tax on Bitcoin gains. MicroStrategy has issued a redemption notice for its 2027 convertible senior note tranche valued at $1.05 billion and will settle all conversion requests for the note offering. According to a January 24th announcement, note holders have until February 24th to redeem their securities at 100% of the principal amount or convert each $1,000 block of notes to Class A MicroStrategy stock at roughly $142 per share. The company's announcement came amid reports of a potential tax bill on $19 billion in unrealized capital gains due to the corporate alternative minimum tax stipulated in the Inflation Reduction Act of 2022. News of the redemption notice received mixed reactions from market participants who were simultaneously engaged in an online debate about unrealized capital gains taxes on digital assets. Digital assets are particularly sensitive to unrealized capital gains taxes due to the high volatility inherent in the crypto markets. Taxing unrealized capital gains not only discourages investment, but could spell trouble for companies like MicroStrategy that have adopted a Bitcoin treasury strategy to preserve purchasing power. On January 2nd, Coinbase and MicroStrategy sent a letter to the U.S. Internal Revenue Service opposing the corporate alternative minimum tax. The unforeseen combination of CAMT and a newly promulgated accounting standard are creating unjust and unintended tax consequences, the joint letter read. MicroStrategy's Bitcoin holdings surpassed 450,000 Bitcoin in January 2025, making it the largest corporate holder of the asset in the world. According to Sailor Tracker website, MicroStrategy currently holds 461,000 Bitcoin valued at approximately $49 billion, and it is up nearly 68% on its investment. The company's most recent Bitcoin purchase on January 21st added 11,000 Bitcoin to its balance sheet, which is the largest acquisition in 2025 so far. David Krauss, a finance professor at Marquette University, recently told Cointelegraph that Saylor's Bitcoin acquisition strategy could erode shareholder equity. The professor warned that sudden, sharp drops in the price of Bitcoin could compromise MicroStrategy's ability to pay back creditors and may even lead to bankruptcy. Well, nobody said it was going to be easy. The only thing better than Bitcoin is more Bitcoin, according to Michael Saylor. So we'll see how this plays out, but certainly the Trump administration will be more helpful than the prior administration would have been in this situation. Next article is from Bitcoin Magazine. This was posted on January 24th and is a opinion piece by Shinobi, the cynics and idealists of Bitcoin. There is something to the stereotype of naive dreamers and idealists, or cold hard realists and cynics. Stereotypes just don't come into being baselessly. There is a kernel of truth to them, otherwise, they would not have spread virally as an idea in the first place. But they, as well as the worldview they espouse, are also exaggerated beyond that kernel. Bitcoin is currently stuck in a game of tug of war between naive idealists and the jaded cynics. On the one hand, the idealists argue that we already won. We don't have to do anything. Bitcoin is magically guaranteed success. It's already going to take over the world. Everyone is going to own it. It is the best store of value ever. That's all it needs to win and succeed. No improvements needed. On the other hand, the cynics argue we've lost or are going to, that short of a total overhaul changing Bitcoin drastically, there's no way Bitcoin can succeed in the world. It will become captured and useless. Who knows where to start is the response to asking for what improvements are needed. Both of these extremes dominating the public dialogue sweeps attention away from two important things: the reality of what can already be done with what we have, and how substantially that reality can be expanded with even very small and simple improvements. As things stand right now, Bitcoin to have any degree of censorship resistance and privacy for a big portion of the world would depend on custodians. The best we can do in this regard is lots of small and local Chaumian eCash mints, but to run an eCash mint requires running a Lightning node. Lightning is complicated, and screwing up and losing the most recent channel state can lose all of your money. The design allows your counterparty to steal all of your funds if you try to use an old channel state after updating it. CTV and CSFS would give us LN symmetry, a type of lightning channel giving a new way for channels to work. Instead of using an old state allowing the other party to take all your money, LN symmetry channels would allow them to just cut through all the intermediary states and spend your old state into the most recent one on chain, ensuring everyone gets the correct amount of money. That one small change, and that is by no means all CTV and CSFS enables, would radically change the landscape of who would be capable and willing to run a local eCash mint. The risk of losing everyone's money through incompetence would almost disappear. This one small new functionality would heavily improve Bitcoin's odds of staying private and censorship resistant. Does it scale self custody to the whole world? No. Does it drastically improve Bitcoin's value despite store of value maximalists claim improvement isn't needed or possible? Absolutely. Bitcoiners need to stop focusing solely on the extremes and poles when it comes to possibility in this space. There's a wide open field, mostly unexplored between them. If we really want to know our odds of success, the limits of what we actually can and can't do with Bitcoin, then we need to explore that field. Couldn't agree more. Nice take. Next up, just some thoughts on the recent digital financial technology executive order. So on January 23rd, 2025, President Donald Trump signed the executive order titled Strengthening American Leadership in Digital Financial Technology, signaling a notable shift in the US government's approach to digital assets and blockchain technology. This directive emphasizes support for the growth and use of digital assets, the promotion of dollar-backed stablecoins, and a prohibition on the establishment of central bank digital currencies within the United States. So, from a Bitcoiner's perspective, this executive order presents a mixed bag. On one hand, the government's acknowledgement and support of digital assets can be seen as a positive development. The order's emphasis on protecting individuals' rights to access and use open public blockchain networks, as well as its commitment to providing regulatory clarity, aligns with the foundational principles of Bitcoin and other decentralized cryptocurrencies. The prohibition of CBDCs in particular is a significant positive step. CBDCs, being programmable money controlled directly by central banks, pose grave risks to privacy and individual sovereignty, potentially enabling unprecedented levels of surveillance and control over financial transactions. By rejecting CBDCs, the executive order demonstrates a commitment to preserving financial privacy and freedom. However, this development should be tempered with caution. Stablecoins, while privately issued, already function as de facto CBDs in many ways. In fact, we just talked about that earlier with the Tether ransom, and then they basically, uh, canceled the transaction that the kidnappers got, you know, because it's a centralized shitcoin. So they are centrally controlled, often backed by fiat reserves, and can be surveilled or censored. And again, Tether is a perfect example of that. While useful for bridging traditional finance and crypto ecosystem, their potential for centralization and lack of privacy reinforce the importance of Bitcoin as a permissionless alternative. Contrary to concerns about the revocation of previous directives, such as Executive Order 14067 of March 9th, 2022, this move does not necessarily introduce regulatory uncertainty. Instead, it signals a shift toward more positive regulatory environment. The SEC's revocation of Staff Accounting Bulletin 121, coupled with strategic executive appointments to agencies overseeing digital assets, to me anyway, suggests a deliberate effort to create a more constructive and clear framework for digital financial innovation. The general tone of this executive order further supports the idea that the US is poised to encourage rather than stifle the growth of this industry. So, to wrap up, while the executive order represents a step toward governmental recognition of digital assets, it falls short of fully embracing the decentralized ethos that underpins Bitcoin. As Bitcoin operates on a permissionless system, it doesn't require governmental approval to function. However, positive governmental support can influence public perception and accelerate mainstream adoption. The prohibition of CBDCs, the promotion of a more favorable regulatory environment, and the acknowledgement of digital assets are all preferable to opposition. Still, it is crucial for Bitcoiners to remain grounded and focused on what truly matters: the continued adoption of Bitcoin as sovereign money, independent of government control. In the end, while the executive order may not revolutionize the space, it lays the groundwork for greater acceptance and understanding of Bitcoin, contributing to the broader adoption of decentralized financial systems. And finally, I wanted to highlight this week's featured post on the Bitcoin Fortress newsletter. Articles entitled The Enduring Wisdom of Marcus Aurelius, Lessons for a Virtuous Life and Inspiration for Bitcoiners. And I'm about halfway through Meditations by Marcus Aurelius and highly recommend it. It's a pretty cool book. All right. We'll move to the weekly top boosts on Fountain. At God's Death with 536 sats. Thank you, sir. And at Hard Knocks with 420 sats. Thank you as well. And with that, we will wrap up. I'll thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. We're here every week, folks. You can also follow my Substack. It's at bitcoinfortress.substack.com. And again, link in the show notes. And you can follow me on Nostr. My NPub is also included in the show notes. And with that, I will talk to y'all next week. Bye bye.